Hello, everyone, and welcome back to the world's best investing podcast. Massive news for Palantir shareholders. Today, Palantir just filed for a patent which enables them to connect digital twins. You may recall that a year ago or something, even more than that, I was saying that Palantir was going to evolve into a network of ontologies and evolve from being just a provider of ontologies. So for the moment, Palantir, what it does is it installs an ontology in your company, and that enables you to leverage AI in a way which really no one else can at the moment. Now, I said that actually that was going to become a network. I said it was going to become something like Gmail. So the beginning email was something rather exclusive and clunky, as are digital twins / ontologies right now. But now the first thing anyone does when they create a company or get a new job or whatever is create a Gmail account or an analogous email service. So we're going to see the same with digital twins, because otherwise it's just impossible to compete in the modern economy. Check out the image I'm putting up on the screen now of this patent. And next to it, you'll see how it's actually spot on with what I was saying. In this post I made, it's actually in 2024, September, I said, Palantir is transforming into a network of ontologies, paving the way for a market cap that could grow 10x or more. Obviously, that was, I was sandbagging that, it would seem. And it just shows you, I mean, I think when a lot of people are asking, are we in an AI bubble or something? And it's obviously the result of a knee-jerk reaction motivated by essentially thinking by analogy. As in, everything seems kind of frothy, everything seems kind of enthusiastic right now. Stock prices are going up fast, and therefore this must be like 2001, in which prices also went up quite fast. Truth is, you have to focus on value creation. So we've talked about many times on the channel how over the long term, stock prices track free cash flow per share. So bubbles or not, if free cash flow per share goes up 1,000-fold over the next decade, the stock price is most likely going to go up 1,000-fold too, depending on how much is discounted in valuation, but approximately directionally, that's what you're going to get. So even if we are in a bubble now, if AI is as transformational as we believe, then I think AI investors are going to do quite well, at least the smart ones that are able to hold on forever. Essentially, you really can't make money in the stock market with a time horizon shorter than 5 years. The ideal one is really forever, because things do get pretty ugly quite often historically, and they do so for many years. The other way to look at this is that other than a long time horizon, what you actually need is to enter these investments with an asymmetric framework. That is, it's not the same to enter Palantir now as it was down at $7 and $8, which is when I went all in, or Spotify at $97.50, or HIMS at 15. So it's like for these theses, the onset of AI is actually asymmetric. If AI works, you make a lot of money. If it doesn't, you probably just go back, or maybe the stock stays at around the current levels over the long term. Who knows? The point is, whenever you are betting on a transformational technology, you really shouldn't do it thematically. As in, everyone's excited with AI now, let me just buy a bunch of these things and not care about the valuation. When I say that actually it's much more important to own and hold an extraordinary company for the long term than the valuation, it means, do you have a thesis which is fundamentally immune to themes and to macroeconomic cycles? Therefore, do you have a company that's capable of solving a growing volume of acute customer pains over time in a way that's increasingly harder to imitate, while printing cash, while reinvesting that cash to compound the advantage? If so, all of these conversations about tops and bottoms, macroeconomic cycles, bubbles, are actually quite ridiculous. And they are the hallmark of the poor investor, of the investor that actually never makes money. It's much more important to understand the value creation at the essence. And so what you have now is basically end consumers paying for AI because it's automating intelligence. What's funny is that we've only really seen a small percentage of all companies in the US adopt enterprise AI. Essentially zero in Europe, and China doesn't really matter. But the market is untapped. And what you have simultaneously is these businesses which have proprietary data advantages. So they have data that no one else has access to, or at least in terms of scale and quality, and that enables them to train AIs that no one else can. That applies to Palantir too. The reason they're able to productize their solution, and now it would seem turn it into a network, is that they've been doing digital twins for decades now. And so they have all the know-how in terms of how to deploy it per industry, per vertical within each industry, and per function per vertical. So it's if unless you have that very specific knowledge, you can't catch up with them. And then every single increment, every single step forward they take in terms of productization makes it exponentially harder for them to catch up. So for competitors to catch up. So we're seeing this with Warp Speed, for example. Warp Speed is a verticalization of Palantir's operating system, Ontology operating system for manufacturing. I pointed out, I believe it was this spring, how useful it was for Anduril in terms of becoming much more efficient in manufacturing when it came to making drones, probably. And now Warp Speed is being used to make ships. Again, it's a similar industry. It's defense, manufacturing, but you're manufacturing something else, but it's fairly agnostic. And so as Palantir continues to onboard customers throughout various industries, verticals, functions, etc., they know better than anyone else how to deploy an ontology, get it running, and ultimately drive top line and margin expansion better than anyone else. As that becomes a network, something really interesting happens. And that's why I believe that if you look at the stock price today and you see $184 and it seems like a lot, up from $7, wait until you see the network flourish, because then Palantir goes from providing ontologies for industries, verticals, functions within, to actually connecting all of those. And that in itself is this sort of it's basically a machine that prints infinite OSs at a level of efficiency and performance that no one else can. Think about it this way: admin is probably not going to be quite too different between, say, finance and healthcare. And so once you have a verticalization of Palantir's OS for admin, it's really a horizontal kind of platform. On top of that, you can build further vertical instances. As each of those instances flourishes in the marketplace and becomes horizontal, it's just exponentially harder to disrupt the operation. And the earning power goes up because as a customer, you simply cannot afford to plug it off. Otherwise, some other guy that's running the software is going to be exponentially more efficient than you are as AI models continue to persist. Now, naturally, this thesis rests on AI scaling laws persisting, and there is no guarantee of that. There is no guarantee that any of us will make a single cent in the stock market going forward. But that is, you have to sort of play favorable risk-reward scenarios. And definitely Palantir at 7 was one, HIMS at 15 was one, AMD at 4.2 was one, Tesla at $13 was one. This is how I've made my fortune. It's how I can do this full time. I wouldn't recommend anyone to chase a hot stock. So I wouldn't say to anyone really, go and put all of your money into Palantir now. Do I believe it's very likely that it goes up orders of magnitude in value as it becomes a network and as it verticalizes its OS, builds countless proprietary data flywheels that essentially make it exponentially harder for everyone else to disrupt? Yes. Has that been my approach to date? No. What I focus very much is on understanding technology, value creation processes, and having a very clear view of how they translate to additional value delivered to the end customer at a fair price. So when you think about a bubble or whatever, firstly, 2001 has nothing to do with this. These were mostly empty businesses with no profits, no revenue, no nothing. Here, we are talking about the world's biggest businesses growing exponentially because we have this new technology that just enables them to do so much more for customers at a marginal cost. So it makes absolutely no sense. Then secondly, it makes even less sense to believe that by just watching videos of people that share opinions, as I do. Take every single opinion with a financial grain of salt. I'm not your financial advisor. My financial advisor is Ronald McDonald, as many of you know. But then the conversation of whether we're in a bubble or not is two things I think people are not really understanding on top of what I've explained, which is one, value creation processes are accelerating exponentially. Two, they're going to accelerate even further as everything becomes a network. So Palantir is a great example of that. I've been criticized many times for sharing apparently idiotic opinions on this company, but I'm up nearly 30x on my investment. I've made multiple millions of dollars with this. I believe it's going to be worth hundreds of millions of dollars. And depending on how AI scaling laws advance, I believe it's going to happen potentially in the next 5 years. The other thing that is sort of incredible is the pace at which this thing is evolving. If you look at the performance of models, they're doubling every 6 months. I think that pace is actually on track to continue accelerating. And so what you can do with an ontology is just, it's going up exponentially every single blink of an eye, basically. This thing is very real. it's translating into end value. And the way you can look at this is just look at the debt profiles of companies. If debt were to be ballooning, then you kind of know that this is not a productive industrial cycle. What you have for now is a cycle in which companies are investing a lot, but then the top line is growing, and so is the margin. The margins are expanding, and then free cash flow per share is inflecting upwards. So really, because AI is exponentially accelerating value creation processes, what we're seeing is exponential free cash flow per share growth. We're seeing it with HIMS, we're seeing it with Palantir, even though HIMS is not really an AI play yet. We're seeing it with Duolingo, we're seeing it with Spotify, with a number of companies. Stock prices are just going to track free cash flow per share over the long term. Now, does this mean, as I said at the beginning of the video, that we don't see some instance in which the narrative goes south? Absolutely, we will see many of those going forward. We saw it as recently as April, when everyone was saying, well, it's time to trim. The US is never going to be the same again. This is self-inflicted pain, the worst kind of self-inflicted pain the nation has seen. All of that turned out to just be a narrative that went south. We're now back to a period in time in which a lot of people say that, this is exuberance, froth, idiocy, idiots looking like geniuses, them looking like geniuses low-key by being prudent, stuff like that. So the narratives do fluctuate, but ultimately, if you have a business that is capable of leveraging AI at a marginal cost, essentially hinging the value creation process on proprietary data, which enables them to create AI models that no one else can, and that is driving exponential free cash flow per share growth, then you're probably going to make a lot of money. That's not financial advice. As I said, that's how I operate. That's why I'm holding Palantir. Not very surprising to see this patent. Apparently they've, I can't make blanket statements, but I'm sure these guys have been iterating on this for a long time. But think about it in terms of earning power. We've seen Uber and Spotify multiply free cash flow per share, essentially driven by a platform which has an absolute data advantage, which therefore connects supply and demand in their respective marketplaces better than any other platform can. And that has put them in a position to deploy additional verticals, make more money per customer, thus increase ARPU, thus drive additional top line without increasing costs. And that's how they've increased free cash flow per share. So if you have a company that has a monopoly in ontologies, every single other company in the world needs an ontology to deploy AI, and therefore to compete and exist, and ultimately, in case of success, thrive. And then this thing is being productized exponentially, and it's being verticalized, and it's being turned into a network of ontologies, whereby Palantir goes from just powering companies to powering industries and connecting them and creating horizontal platforms that make everything much more efficient for everyone, regardless of the industry. Well, what I think you have is a giga winner. So I'm up nearly 30x now. I think it's 26, 27. I don't even know right now. I think this is going to be up 1,000x eventually, just because I'm looking at the value creation processes. We could see 50% declines as we saw in April with the thing. But long term, I think this is going to be a giga win. What I think happens also is that with AI, because AI winners are ultimately propelled by network effects, we're going to see a smaller and smaller portion of all the public companies delivering more and more of the returns. So we're going to see Pareto's law get supercharged. So you're essentially going to have a handful of winners over the next decade, which are going to do everything. Palantir, I believe, is going to be one of them. What that is going to do is it's going to have a record number of investors crying and hoping that this is a bubble. So that mirage, actually, it's always present in the stock market. When you are down, it's always the narrative of this asset is worthless. When it's up, it's the narrative of, sometimes the narrative that works against you is this thing is overvalued and this is exuberance and froth. So you always have to be working with the narratives. But here, it's sort of an unprecedented time in history in which things are going exponential, driven by network effects. And then we have social media. So you have people crying every day and people being very optimistic every single day. And so it's now more important than ever to be focused on value creation processes. Anyways, guys, I wanted to share this little nugget with you today of how Palantir is seemingly now positioned to become a network of ontologies. It's going to get pretty crazy. So again, I'd be focusing on value creation processes. It's how I've done it to date, and it's how I'll do it going forward. I think that very few investors are going to understand what's going to happen in the next 5 to 10 years, but it's a time of unprecedented opportunity. So it's a great time to be dedicating much more time to updating your mental models and really upgrading your mental game, which you can do, by the way, with my course, which is amazing and people love it. And you have a 14-day money back, no questions asked guarantee. Sells for just $399. And I think I've outperformed everyone. A lot of you guys were saying, well, show us proof. You have proof, for example, from yesterday that I've been super bullish AMD for years while everyone was saying it sucks. Now, all of a sudden, it's one of the crown jewels for the AI race. So you can judge me on what you've seen me do publicly, which I think is already pretty good. So guys, thank you very much for your time. If you enjoyed this video, could you please share this with someone else whom you think will enjoy it? These videos and updates are for free. So the only way this grows is with your help, for which I'm very grateful for. Take care and see you next time.